Bull or bear? Spinning the big 5-ounce Everglades commemorative U.S. quarter. And I did say 5 ounce. And when she come up, she comes up a bear. Good evening, and hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the live Southwest Florida Eagle cam up right now, and yeah, this is a live cam. I usually do the fish cam, but a little bit too dark right now. Just enough light to enjoy the live Eagle cam here. And you know, I stumbled upon this camera not too long ago. I said, man, that's just wonderful. Take a look at this. These are really huge, wild, and forgive the term, grand birds. I mean, it's our country's icon, more or less, and I can see why. Mommy and Daddy Eagle up there taking care of a nest. If you look at my cursor, right below them is a nest of 2 other eagles. And again, this is the live Southwest Florida Eagle cam. Got to appreciate stuff like this. Because, again, in a very suburban area, too, you really wouldn't expect it in. Well, this is not a National Geographic program. Oh, hold on one second. I think they're going to kind of rotate down into the nest. No, they're going to just zoom in on their feet, I guess. All right, again, not a, went into the night cam vision here, which is kind of cool. All right. Well, anyway, you can watch this yourself live, Southwest Florida Eagle cam. I didn't even know you could watch it in the evening. I guess they've got an infrared cam there as well. The chicks are right below these 2 beautiful creatures, and you can find it on YouTube. Well, what's going on with precious metals markets, and that's what I'm here to talk about. We're going to get into a really short video tonight. I'm going to do I'm going to finish up part 2 of last Saturday's video where I was talking to the AI program, AI.org or whatever the heck it is. I'll show you in a moment. Asking questions about the price of gold and other interesting things, which I thought the answers were pretty damn good. We're going to get into the rest of it because I couldn't finish that. Meanwhile, prices of gold still in that lower $1,800 range, as well as silver, kind of in that mid $20 range, and platinum as well in the lower mid range of that $900 price level, and palladium still substantially less than gold. Few rumors out there that I've heard that people are saying that they're going to start replacing, instead of using palladium and catalytic converters, they're going to start using platinum. I don't know if that's true or not. If that is, that might wouldn't explain anything, because you think platinum would go up substantially in price as well. I just think the platinum market is probably just as small as the silver market, and palladium market's probably even smaller, and they're monkey hammered by big commercial banks or other forces out there, I'm sure, in the crooked Crimex markets. But no less, let's get into silver. Still a great buy. Gold, still a great buy. And premiums are still substantially cheaper than they have been in the past, folks. I think that there's a lot of good products that you can buy that are between spot plus $2 and spot plus $3 per ounce on silver. A lot of good products you can buy in gold that are probably in the spot plus 70 to a spot plus $110 range. And if you're buying larger quantities, of course, you know, more quantity means that you can buy for a cheaper price. I'm just talking about smaller quantities that you should be able to buy those products, you know, most products for. So premiums are really cheap. Price of gold, silver, and platinum are really cheap, in my opinion, artificially so. But let me get into finishing off this chat OpenAI.com conversation that I had, and I kind of stopped it here. If you look in last week's video, there it is right there. How much has the dollar declined in buying power? And I said I would continue it this evening, and that's exactly what I'm going to do. So I asked this what is it, Lingual or whatever they call it, AI chatbot, how much has the dollar declined in buying power since the Federal Reserve took over in 1913? And what would be the correlation between the Fed taking over and the decline of the buying power of the U.S. dollar? And the answer was, since the Federal Reserve was established in 1913, the U.S. dollar has experienced a significant decline in its buying power due to inflation. According to the Bureau of Labor Statistics inflation calculator, $1 in 1913 is equivalent to $26.34 in 2022. And remember, this is official data, not probably realistic and true data. This is official data that AI is drawing upon based on values that it's given by official U.S. stats, okay? Data, or whatever you want to call it. is equivalent to $26.34 in 2022, indicating that the U.S. dollar has lost approximately, get this, even using official data, 96% of its purchasing power since the establishment of the Federal Reserve. Wow, that's just huge. Since 1913, the dollar has lost 96% of its purchasing power, folks. Think about that. Let me go sip there. It is worth noting that the correlation between the Federal Reserve taking over and the decline of the buying. I love these answers, actually. I think it's, for the most part, this AI has been pretty much spot on. You can start to tell, there's a saying that, remember, this AI is not thinking on its own. It's deriving its data and its sources for its information from, again, official sources, official government sources when it comes to economic data. It's deriving its data even from Wikipedia. I think I asked it one time, do you get your data from Wikipedia, Snopes, and these other places? And it does. It derives its information. So there's an old saying in the computer industry, I think you can apply it to humans as well, garbage in, garbage out. Whatever garbage you put in a computer to respond to someone's question is the same garbage that you're going to get out. So if you put in garbage, you're going to get garbage out. And that applies to humans too. The same thing with little kids. As we're raised as children, if we're fed with garbage, it's going to be garbage out. And again, sorry, I kind of digress there, but where were we? It's worth noting that the correlation between the Federal Reserve taking over and the decline of buying power is a topic of debate amongst economists and historians. Some argue that the Federal Reserve's monetary policies, such as increasing the money supply and setting interest rates, have contributed to inflation and the decline of the dollar's purchasing power. Absolutely, that would be absolutely certain. I mean, we've got two types of economics here. We've got Keynesian economics and, oh my gosh, I forgot. I've got his nemesis. Oh gosh, this is what happens when you get old. I do apologize. Well, have contributed to inflation and the decline of the dollar's purchasing power. Others argue that other factors such as changes in global trade patterns, the transition from a commodity-based economy to a service-based economy, and geopolitical events have played a more significant role in the decline of the dollar's buying power. I'm sure there's a little bit of all of that is absolutely true, okay? AI says it is also worth noting that the decline of the dollar's purchasing power has not been linear and there have been periods of high inflation and deflation over the past century. Additionally, the dollar status as a world reserve currency has helped to maintain its value and stability despite inflationary pressures. And again, remember, garbage in, garbage out here. The dollar status as the world's reserve currency is still there. We are still the lead dog out there. Don't let anyone fool you when it comes to saying, all right, a lot of people out there saying, all right, the dollar's dead, the dollar's over, it's gone, gone, gone. No, folks, the dollar is not dead. In fact, I think it would be safe to say even how poorly run this country is by political and economic leaders and leaders at the Fed, how poorly it is run and has been run for decades, that other countries and other leading fiat currencies out there are even doing a worse job than the Fed are. I mean, I think the Fed is brilliant to some degree that they've been able to keep this charade going since 1913. So I think the Fed is what is traditionally known as the last horse to the glue factory. Does that make you a winner? Not really, I don't think. But, anyway, let's move along from here because I can make this very long here. And I asked this question here, that's me, B. Why have you not mentioned the fact that there appears to be a correlation of the dollar's decline in buying power when its past gold backing was removed? Okay, that should have had a question mark there. I didn't put it there, but this thing understands humans' stupid mistakes. What effect did going full fiat have on the long-term economy? Question mark. Also, what is the longest surviving fiat money in history to date? Now, kind of interesting answers here because it's not what I necessarily expected. AI answers me and says, let me expand this a little bit. You are correct that the removal of the U.S. dollar's gold backing in 1971 has been cited as a factor in the long-term decline of the dollar's purchasing power. However, it's admitting that I'm right about this. However, it didn't bring it up. It was funny. It didn't bring it up. All right. It should have been something that it brought up in the conversation that or the questions that I asked just previously. But let me move along here. I digress. When the U.S. ended the gold standard, it allowed the government to print more money without the constraint of having to back it up with gold reserves. This led to an increase in the money supply and contributed to inflation. Okay, now we're getting somewhere, folks. I love this because the machine, when you start to question it more and more, this AI, again, garbage in, garbage out, is drawing on all the data that it can find on the internet from a certain point, and it draws on certain data and trusts it more than it probably should trust other data. But no less, like some of the answers that it's coming up with when I kind of force it to answer specific questions, all right? Not force it, but, be more specific. It allowed the government to print more money without the constraint of having to back it up with gold reserves. This led to an increase in the money supply and contributes to inflation. Beautiful. Absolutely true. Inflation is not a bunch of greedy mercantiles or greedy business people out there, people dealing in commodities, well, maybe in commodities, but isn't a bunch of greedy, at least in the comics markets. But it's not just because your local hardware store just figures I need to make more. Well, maybe they do too, but again, inflation is primarily driven on the fact that more money is printed and it decreases the value of the money and the value of what it can buy, all right? Which in turn reduced the buying power of the U.S. dollar. Going full fiat, now again, I had asked this question, going full fiat, and I like the fact that it used that reply to me. The AI program used this reply. Let me get a sip here real quick. This is pretty cool, I think. Going full fiat had both positive and negative effects on the U.S. economy. On the one hand, it allowed the government to have more flexibility in its monetary policy, which could be used to manage economic growth and stabilize the economy during times of recession. On the other, which is interesting because, again, this is the common reply that you hear from people that say, well, the gold standard sucks. You can't be on the gold standard, for this and that reason. This is their common reply of the intelligent, somewhat intelligent ones that give you a response to this, all right? On the other hand, it also led to inflationary, again, Keynesian thinking and Keynesian economics. That's the kind of reply you'll get from those people right there. And it says, on the other hand, it also led to inflationary pressures and decline of the value of the U.S. dollar over time. So AI is fully admitting that the lack of backing in the U.S. gold has a really, again, that inverse chart that I show you where gold's going up and the buying power of the dollar goes down. That is an inverse chart. They follow each other specifically. They may have choppy movements like this, but that's a fact, all right? Regarding the longest surviving fiat money in history, I thought this was an interesting response. It is difficult to identify a definitive example since the concept of fiat money has only been in existence for a few centuries. All right, well, okay. However, some of the oldest examples of fiat money include the Chinese. All right, I didn't really ask for these examples, but it's kind of cool that it had, again, kind of cool. It's giving me some examples of old fiat money and stuff, but this is not what I had asked. I said, what is the oldest surviving fiat money that hasn't been devalued, and it really didn't answer that. Let's get it on, move along here. My next question is, what fiat currencies survive the longest without being devalued or called in? And again, AI says, my understanding it's the US dollar, okay? But AI says it is challenging to identify a fiat currency that has survived without being devalued or called in, since most fiat currencies have experienced some level of inflation. They're calling it inflation. Really what it means is to print too much, and it's devaluation, not inflation. Devaluation would be a better term. Or other forms of devaluation over time. Good answer. However, the Swiss franc is often cited as one of the most stable and resilient fiat currencies in the world. Interesting, I didn't know that. I thought that the Swiss went off the gold standard long, long ago, so I don't really feel that they're the most stable, resilient fiat. Did they go off before we did, or did we go off before they did? Good question. If anyone wants to answer it in the comment section below, let me know. I'll probably look afterwards. And I'll continue. It says the Swiss franc has a long history of maintaining its value and stability even during times of global economic turmoil. The Swiss National Bank, which is responsible for the country's monetary policy, has a reputation of being conservative and cautious in its approach to managing the money supply, which has helped maintain the franc over time. Additionally, Switzerland's political stability and reputation for fiscal have contributed to the franc's stability. So more or less, I think what they're saying is that the Swiss is more stable than the U.S. dollar, and they've I don't know. I'm not quite sure. I'm sure the Swiss franc buys a lot less than it did, just like the U.S. dollar. And I'm sure that when the when the Swiss franc was backed by gold, back when you could take a gold French or a Swiss 20 gold franc and take it to the Swiss bank and cash it in for 20 francs or something like that in Swiss notes. I'm sure that was a whole different time. But you can't do it with the dollar anymore either. So it is indeed a fiat currency. Additionally, Switzerland's political stability and reputation for fiscal responsibility have contributed to the franc's stability. I don't know a lot about the Swiss. I think they've kind of, there's no longer, you can no longer keep your money in the secret accounts. You can't keep your money there quietly anymore. I don't think you can redeem the Swiss franc for gold anymore. They're off the gold standard as well. So, but maybe they've been around as long as the U.S. dollar has. So let me get on to the next question here that I asked this AI program, which was, so all fiat currencies eventually resort to zero, ? And AI answered, it is not accurate to say that all fiat currencies will eventually resort to zero value. However, fiat currencies, and I'm curious, it is not accurate to say that all fiat, I guess you're correct, because we still have fiat currencies in existence like the US dollar and the Swiss franc that haven't gone completely away, but really they've been devalued if you think about it. They're not redeemable in gold anymore. I think the computer or the AI completely doesn't see that fact, all right? The U.S. dollar defaulted when Nixon took us off the gold standard, and I think it's probably the same thing happened to the Swiss franc. They defaulted when they went off the gold standard as well, as did other countries. But I digress again. However, fiat currencies do have a risk of losing value due to inflation, economic instability. Other factor, we've already heard that from AI. Fiat currencies are not backed by any tangible asset. I'm glad it brought this up because it's true, such as gold and silver, and rely solely on the trust and confidence of the public, all right, in the issuing government's ability to maintain their value, all right? Very important comment right there, or statement there. If the public loses confidence in the currency or the government's ability to manage the economy, then the value of the currency may decline. Absolutely true. However, it is important to note that many fiat currencies have been in the circulation for decades or even centuries. Okay, it is important to note that many fiat currencies have been in circulation for decades or even centuries. Wow, I don't believe that's true. Decades, yes. Centuries, no. Which fiat currency has been around for centuries? In fact, if I was going to ask some more questions, and I'll have to log into this, I don't think there's any. I think this is a completely bullshit. By the way, if you have this program right here, ask what fiat currency has been around for centuries. I don't think there's any. That's just a bad answer in my opinion. And see, AI is not that smart. Garbage in, garbage out. And here we go again. And some have maintained their value relatively well over time. For example, the US dollar, the euro, and the Japanese yen are all fiat currencies that have been in circulation for several decades, not centuries, and remain widely accepted and stable. I believe we are the longest surviving fiat currency. Again, I'm tempted to ask it which fiat currencies have been around for centuries, because there are none. There are none. That is just a stupid answer. Again, if I'm wrong, let me know in the comment section. Here, my throat's dry. Give me 1 sec. Therefore, let me move along here. Fiat currencies do carry a risk of losing value over time. It is not accurate to say that all fiat currencies will inevitably reach zero value. I disagree 100%. I believe that maybe, in fact, I think all the fiat currencies have defaulted. I mean, all fiat currencies. Well, the U.S., we became a fiat in '72 when Nixon took us off the gold standard. So really, we're still around. And the Japanese yen is still around since, wartime or something like that. And the Swiss have been around probably since before wartime. So maybe the Swiss are the longest survivor fiat currency. I'm not quite sure, but when did they go off the gold standard? I don't know. It is accurate to say that no, give me 1 second. There we go. Hold on. I asked this question. I said it is accurate to say, not question, but I made the statement. It is accurate to say no fiat currency has increased in buying power over time. and most have decreased substantially over time, except for gold-backed money, which has seemed to maintain its buying power. That's kind of a statement by me. That's not a question. AI answers, it says, it is generally accurate to say that fiat currencies have experienced a decline in their purchasing power over time due to inflation, again, same old shit here, and other factors, whereas gold has maintained its value over time as a store of wealth. I like that, store of wealth, something we talk about all the time. It's almost like this program, watch some of my videos. Fiat currencies, as I mentioned earlier, rely on the trust and confidence of the public and are not backed by any tangible assets such as gold. This means that the value of fiat currencies can be influenced by a variety of economic and political factors, including inflation, government policy, global economic conditions. I like this. The AI program is getting into more details about what affects a fiat currency than what I had originally asked about. Let's continue on here. In contrast, gold has been recognized as a valuable asset for thousands of years and has maintained its purchasing power over time. While the price of gold can be fluctuate in the short term, again, it's almost like this freaking damn thing watched my videos. I'm telling you, it's what we talk about all the time. It's right out of my own mouth. It's kind of weird. It's parroting me. While the price of gold can fluctuate in the short term, it has generally maintained its value over long periods and is often used as a hedge against inflation and other economic risks. However, it is also important to note that the price of gold can be influenced by a variety of factors, including global economic conditions, supply and demand, changes in investment sentiment. Additionally, while it does not generate, anyway, we're getting to what I talked about earlier. But what it does not talk about, which we've talked about earlier, I have asked in past videos, I've asked AI, because it does say that gold can be influenced by, supply and demand, investment sentiment, and all that other stuff. But it never said that it can be. It doesn't even say here that it can be gold's price can be affected by manipulation in the gold markets. And as you know, in the past video, I dug deeper into that, and this AI program did indeed say that gold and silver prices were manipulated by big commercial banks. Great video, I did it a while back ago. But again, it doesn't bring that up here. Like I said, garbage in, garbage out. I ask here, is inflation primarily caused by the increase in money supply or the greed of producers? I think I said this earlier. AI answers me, inflation is primarily caused by the increase in money supply. I thought this was a dead honest answer and, again, spot on, okay? Nailed it. In the money supply relative to the supply of goods and services in the economy. When there's too much money chasing too few goods, the result is typically an increase in prices, which is what is commonly referred to as inflation. Bravo. Great explanation, all right? There are a few different ways in which increase in the money supply can occur. One way is through the central bank's monetary policy, where the central bank increases the money supply by printing more and more money or buying financial assets. Another way is through government spending or borrowing, which can also increase the money supply. Folks, interesting, it brought up two things. Central bank increasing money supply by printing more money and government spending more and more, both which are indicating to us that we're going to see a large increase in inflation, even more coming up here in the future, again, because of the central bank's policy of making more money and our government's policy of spending more. Even AI openly just says outright here, that is just the only thing to come out of that is more inflation, and that's what we're going to see here. AI also says why the behavior of producers can have an impact on inflation is typically a secondary factor. For example, if producers increase their price in response to increased demand or rising input costs, this can contribute to inflation. However, this behavior is usually a response to the underlying increase in the money supply rather than the primary cause of inflation. All right, in summary, inflation is primarily caused by increasing the money supply. Okay, we know that. That's what we talk about in precious metals all the time. Other people think inflation is caused by greedy producers or the increase in commodity prices. Yeah, the commodity guys want more money. Well, there may be some truth to that because commodity markets are mostly crooked because they're run by the CME Group and others. But no less, let's move along here. Knowing governments are historically not fiscally conservative, this is my question, the gold standard will prevent irresponsible governments to spend within their limits. And again, comma, correct, question mark. AI answers me, answers me, one of the key arguments in favor of the gold standard is that can help to prevent fiscally irresponsible governments from overspending and accumulating debt. Under the gold standard, the supply of money is tied to the supply of gold, which limits the government ability to print money and finance spending through inflation. Okay, there we go. Pretty simple. With a fixed supply of gold, the government cannot simply print more money to fund its spending program. Instead, it must either increase tax revenues or borrow from the private sector to finance its spending. Folks, that's the way it should be. Spending within your means, okay? But again, let me move along here. This can help promote fiscal responsibility by forcing, here we go, even AI says this, by forcing the government to balance its budget and limit its spending to what can be financed through tax revenues or borrowing. Wow, wow. I think this AI program actually, to some degree, I think it could run for Congress or Senate and win. It could definitely win the presidency right now, but I digress again. However, it is worth noting that the gold standard also has some drawbacks. Here we go. One of the main challenges with gold standards is that it can limit the government's ability to respond to economic crisis and fluctuations in the business cycle, which really means that it limits the government from manipulating supply and demand, basic supply and demand factors, and basic, all right, we produce too much shit. It has to come down in value. Some people are going to suffer from that. It prevents governments from coming in there and artificially manipulating markets, which is a good thing. However, I don't think AI necessarily, based on the data that it gets, garbage in, garbage out, believes it's a bad thing itself by the comment here. So without the ability to adjust money supply, the government may not be able to provide sufficient liquidity during times of economic hardship, which can exacerbate recessions, depressions. But folks, that's what supply and demand does. That's what, the marketplace, if you follow true marketplaces, real supply and demand factors, and you let the market figure out where it needs to go, there are going to be times of bust. There's going to be times when things go bust. But that's a natural thing in the marketplace. When things go bust, it means they're going to sell really cheap. People that have stronger money are going to come up and pick up the pieces, and things are going to get better quicker. But that's basic economics 101, which none of our politicians and economic leaders follow, but I digress again. Additionally, the gold standard can also limit the government's ability to pursue other policy objectives, such as promoting full employment and economic growth. Overall, while the gold standard can help to promote fiscal responsibility, it may also have some drawbacks that need to be carefully considered. All right, so I asked, so gold would be bad for Keynesian government policies, correct? And I love this. Right out, it says, yes, the gold standard can be problematic for Keynesian government policies because it emphasizes the use of government spending and monetary policy to stimulate demand during recessions and promote economic growth. Sometimes it's all about asking the right questions, folks. I think in this particular instance, I asked the right questions. Let me know what you think in the comment section below. And of course, if you got this program, chat.openai.com, it's so cool, man. Again, remember, garbage in, garbage out. There's some real garbage in there, and there's some real gold in there as well that you can get from this program. And I think we're seeing an example of both here. But I like it. It's kind of fun to play with. And it's going to get better and better, actually. Hopefully it's going to get better and better. Hopefully it's not going to give us canned bullshit official responses that the powers to be want us to hear. But I'm hoping for an independent thinking AI, but maybe that's a scary thought too. All right, again, jumping down these rabbit holes. Under the gold standard, the money supply is fixed and tied to the supply of gold, which limits the ability, blah, blah, blah. The government may want to increase money supply, blah, blah, blah. Under the gold standard, this might be possible as would be tied to the supply of gold. Yeah, well, that's a good thing because it would restrain politicians and people from spending more than we take in. Okay, so that's a good thing. It doesn't really say that's a good thing right here. After that period, it should say that's a good thing, but it doesn't. Again, garbage in, garbage out. Similarly, under the gold standard, but this thing is not supposed to have an opinion. It's supposed to give me, not its opinion, but, the opinion based on the data should say right after here that it would be a good thing to be backed by gold because it would restrain spending, and that's exactly what we need. But it doesn't say that because, again, garbage in, garbage out. Similarly, under the gold standard, the government may not be able to pursue Keynesian policies such as deficit spending. That's a good thing, folks, which involves increasing government spending during recessions to stimulate growth. All right. Increasing spending during a recession, government spending to stimulate demand, that's way Keynesian, man. That's just going overboard. The government would need to rely on tax revenues or borrowing to finance the spending, which can be more difficult to blah, blah, blah. Again, couldn't disagree with more than that. But like I said, there's some gold in here and there's some garbage in here when you talk to this AI thing, and I think you're seeing that right here. Overall, while the gold standard helped promote fiscal responsibility, again, that is the key. Gold will help to promote fiscal responsibility. It may limit the ability of government to pursue Keynesian policies that are designed to promote economic growth. We've already learned that Keynesian policies don't work. They just don't work, okay? All right, but I'm going to move along here. I don't think AIs realize that. And I asked, why are we seeing the failure of Keynesian economics and fiat currencies more and more? All right, I like the answer here as well. It's important to note there's an ongoing debate and disagreement, blah, 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 Keynesian economics and the merits of fiat currencies. However, some people argue that we're seeing a failure of these approaches due to various factors. Of course they would argue that. One argument is that Keynesian economics have been unsuccessful in promoting long-term economic growth and stability. Critics of Keynesian economics argue that the government's intervention in the economy, such as deficit spending, monetary stimulus, can create short-term economic growth, but may ultimately lead to inflation, and other economic problems in the long term, all right? I wish the AI could say duh right there, because it probably should. Similarly, some people argue that fiat currency have been unsuccessful due to their susceptibility to inflation devaluation. Again, you can read this here. It talks about the failure. It talks about the failure of Keynesian economics and fiat due to the unsustainable debt levels that many countries have accumulated. Critics argue that deficit spending and monetary stimulus have allowed governments to spend beyond their means, leading to AI is basically pointing out the obvious here, folks, the things that's kind of costing us a lot of money and that we all know is happening. But it really, it presents it in kind of an unbiased fashion when it really shouldn't, because Keynesian economics don't work. We know it. We all know it. Anyway, I guess AI doesn't know it yet. I asked down here, given all the data you have, and please pretend you could have an opinion, do you like gold and silver as a form of wealth preservation? I expected it to say I don't have an opinion, and that's kind of what we got. I do not have a personal opinion, blah, blah, blah. Gold and silver have been used as a store of value in medium exchange for thousands of years. I do like the answer. Again, there's some garbage in here, there's some gold in here. AI says gold and silver have been used as a store of value and a medium of exchange for thousands of years. They are highly valued for their scarcity, durability, and intrinsic value, unlike fiat currencies, which can be printed in unlimited quantities by governments. The supply of gold and silver is limited and relatively fixed. Great answer. I agree with that 100%. Historically, gold and silver have been seen as a hedge against inflation, a safe asset during times of economic uncertainty. They can provide a reliable store of value and can be used to diversify an investment portfolio. However, it is worth noting that gold and silver do have some drawbacks. They do not provide a yield. Again, I've talked about that. This is where AI, I think, is kind of stupid, is not realizing that gold and silver is not about providing a yield. It's about providing wealth preservation, which it does point out many times here as well. For some reason, it kind of, again, garbage in, garbage out. They do not provide a yield or dividend like stocks. They can be subject to price volatility, of course, but overall, the overall inward trend to gold and silver is upwards, as long as we're in a fiat-driven world, which is downwards. And it points that out as well, but again, it forgets it here when it gives me an answer. Additionally, there are costs associated with storing and securing physical gold and silver. Of course, we know that. Overall, whether or not gold and silver are a good form of wealth preservation depends on an individual, blah, blah, blah. Be careful making investment decisions. Again, canned answers. I'm sure that it's been programmed to talk about. I asked again, has gold and silver prices kept up with inflation since Nixon took us off the gold standard? If so, by how much? Gold and silver prices, and again, this is the answer by AI. I like it. Again, some gold, some garbage. Gold and silver prices have generally kept up with inflation since the United States went off gold standard in 1971. However, the exact relationship of gold between gold and silver prices and inflation can vary over time due to a variety, okay, blah, blah, blah. According to the Bureau of Labor and Statistics Consumer Price Index, we look at that, CPI inflation calculator, the cumulative rate of inflation from 1971 to 2021 was, look at this, inflation. This is the official, what the official garbage in, garbage out stuff that the computer gives us, which is bad. I imagine the real stuff is even worse, 565.3%. During that same period, the price of gold increased from $40 an ounce in 1971 to around $1,800 per ounce in 2021, which represents an increase of more than 44%. 100%. Folks, again, I can't stress enough times, I don't know why AI doesn't have enough to be able to connect what it just told me here with the fact that gold is superior to the fiat currencies as far as a hedge against it, rather than stating the opinion that some people believe in this and some people believe that. The data clearly suggests that gold is a far better thing to hold on to than fiat currencies. And you would think that the AI computer would be smart enough to just come out and say that, but again, let me move along here. Similarly, the price of silver increased from around $1.40 an ounce in 1971 to around 26 per ounce in 2021, which represents an increase around 1,700% for silver. That's a good, again, this is what the AI told me. It is worth noting, however, these prices do not mean that gold and silver are going to be blah, 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 risk investments. I hope you enjoyed this because I enjoyed asking the questions, and I think I'm going to get more into that in some later point. But meanwhile, I'm going to get into the news. What does the news have to do with the price of gold and silver? Well, it has everything to do with the price of gold and silver because the worse the news, probably the better the price of gold and silver down the road. And folks, I think that this actually says that Belarus is about to get involved with a war because now they have an excuse. I think before the ground thaws in Ukraine, that Belarus is going to declare war on Ukraine as well, and that the Russians, and nothing good there, but hopefully this war ends sometime soon. What does that got to do with the price of gold and silver? Absolutely everything. In times of uncertainty, it's a great place to be, and that's where we are, very uncertain times out there. Let's talk about last week's video. I'm getting a little bit tired here. Got to grab a bite to eat and call it a night. Silver gold weekend wrap up. I'd like to thank everybody for watching. Really can't get into the comments too right now. Again, I said I wanted to keep this video short, and I'm going to have to, but I'd like to thank everybody for all your comments out here. And, oh gosh, now I'm tempted to answer all of them, but I can't tonight. Let me move into this, which is saying that if you don't find me on YouTube, you can find me here at some point, and there's probably a reason you won't find me on the YouTube channel sometime because I said something stupid according to them. But anyway, if you ever not find me there, you can find me here. You can also find me here as well. I'm getting more questions. I'm posting some more stuff out here and getting more active as well. Here, let me give you my profile and show you what I look like. Brian Kuzmar at briankuzmar.com on Twitter. You can find me there. And most of all, if you're looking to buy gold, silver, and platinum anywhere from $1 worth to millions of dollars worth, we are here in South Florida with our brick and mortar, 10 to 4 on Mondays through Fridays at Commercial Rare Coins and Precious Metal in beautiful Lauderdale by the Sea. If you live outside the state of Florida and you can't come and visit us, unfortunately we don't do any shipping. I do recommend you find a good local dealer. And that's it, folks. I'm going to call it quits right now. Hope you have a great evening and look forward to talking to you tomorrow. Bye now.